What's going on, you guys? This is Shiraz Ahmed coming at you with some more financial and business content. So for today's video, I wanted to go over a topic that's near and dear to my heart, which is gold. And no, not because I'm South Asian, because it is one of the most mystified investment assets that is out there. So today I wanted to demystify that for you guys and kind of take you behind the curtain a little bit on how to invest in this thing and how it could potentially be one of the best assets that you could own in your portfolio. So stay tuned. Alright, so let's get into this a bit further. To understand gold, you really need to get into the history of gold a little bit. So let's rewind way back when. For the longest time, for almost 500 years, if not longer, gold was considered money. Really, that plain and simple. Gold was money. And there's a fundamental date that changed that, which is in 1971 when President Richard Nixon took the world off of the gold standard. And most people probably don't care, and I know that this might be a little bit boring, but it's important to note that prior to that, you could actually take a US dollar bill, go into any bank, and walk out with 1/35 of an ounce of gold, because that's technically all the dollars were backed by gold. But in 1971, they made a fundamental change in that they de-linked gold from money. This is now what's known as fiat money. That's our money today. It's not backed by anything. It's backed by a promise by the Federal Reserve that they can make good on it by the nation's debt. Groovy? Okay, you guys get me. Now, that's one interesting point, is gold was money for a really long time. So now let's get into gold as an investment. And one of the things that you'll find is that if you go back into the history of basically any culture, at some point you'll likely see an intersection of any culture and gold. An interesting note about it is that it's basically impossible to create gold. They've been trying since the Middle Ages. They still haven't been successful at creating gold. And it's near impossible to destroy gold. So there's actually an interesting stat about gold that if you actually took all the gold that's ever been mined in all of history and combined it into one giant cube, it'd be maybe 20 cubic meters in size, about 20 by 20 by 20. So something like the size of a small swimming pool. It's not that much. Now, it's a super dense metal, so something the size of this, which is, now, I wish it was gold, it's actually silver, but this is a troy ounce of silver. Now, if I had this piece of gold, the same size, then it would actually be worth about $1,700 today. And it's not because it has any real intrinsic value. The value that gold has, just like silver or any other commodity, is how much of it there is. Okay, follow me so far? Nice. Okay, now, how has gold actually performed as an asset? So to get into that, let's dig a little bit deeper into how it's actually performed in history, okay? Now, it's been revered as a safe haven asset of all assets alongside the US Treasury and Swiss francs, but how is it actually done? Let's look into it a bit further. Now, one of the best runs that gold's ever had in history was in the 1970s. There was runaway inflation. I don't want to get too deep into the rabbit hole and some of the scenarios that were going on, but so from 1970, when Richard Nixon took the world off of the gold standard, gold went from $35 an ounce until 1980 when it peaked at about $850 an ounce. That's a 2,000+% move. That's phenomenal return on gold. Great. Except for the fact that in 1980, to fight this runaway inflation, Paul Volcker came in and raised interest rates through the roof. That's why my parents bought our childhood home at a very high interest rate, unlike what we're seeing today. So in that scenario, gold fell like crazy, down to about $250 an ounce. So the next time gold performed well was in 1985. And from 1985 until 1987, gold moved from about $290 to about $500 an ounce. Now that's like an 80% movement in price, which is also good, but after 1987, just like it did last time, it crashed again. So it fell all the way back down, again to about $250 an ounce. Now, the next time gold did reasonably well after that was in the mid-2000s, or early 2000s rather, where it moved from about $250 an ounce in 2001 all the way up to $1,900 and change dollars in 2011. Now, I remember that because that's when I got married. I remember having to buy a bunch of gold at that time, and it sucked because it was really expensive. But that was a historical all-time high of gold. It was about $1,900, I think $1,924 to be exact. After that, the same thing that happened in previous history, gold price collapsed again. And the gold price collapsed pretty far down. It went around $1,100 an ounce. And then the next time it did well, which is the most recent run that we're in right now, from about $1,100 an ounce in 2015 to a little over $1,700 an ounce today. So as you can tell, gold's had kind of a choppy history, but it has actually proven itself to be a bit of a safe haven asset over time. So how do we look at it as part of your portfolio? So the best way that I've seen historically to ever do this is to think of gold as fire insurance on your portfolio. Okay, it's the one piece of the portfolio that frankly you don't really want to go up, because just like in the case of a fire, that means your house is on fire. That sucks. So in this case, gold is an asset that you want to own as what we would call in the industry a hedge. It is there in case other things don't do well, and you want to control how much of it you own and frankly when you own it. As you can tell, it has a fairly volatile or choppy history. It is a commodity after all, and it is a highly coveted asset. I mean, the number one owners of gold on the planet are central banks. So reserves for nations are held in gold. So if it's good enough for their portfolio, my question to everybody is it good enough for yours? So I'd love to hear feedback from you guys. Is how do you guys incorporate gold and other alternatives into your portfolio? If you have any questions about anything, I'd love to hear from you guys. Drop me a line, drop me a comment, and stay safe out there. All the best.